Welcome to Beat the Bell. I am Dominique Broadway, first-gen millionaire who has helped over 600,000 people build wealth, but that's not enough. You're next. So this is one of the most critical weeks for your money in all of 2026. We've got inflation data dropping, a Fed chair transition happening this week, and markets at record highs. So let's break down what all of this actually means. So let's talk about why this week is going to be historic. So here's the setup. Jerome Powell's term as Fed chair actually ends this Friday. Kevin Warsh is expected to replace him, and markets love this. You know why? Because Warsh is seen as more dovish, and that means he actually favors cutting interest rates, which is generally good for stocks and for borrowers. But here's the tension. Inflation is still at 3.3%, way above the Fed's 2% target. So when prices are rising this fast, cutting rates too soon can actually make inflation even worse, believe it or not. So we have a new Fed chair who wants to cut rates, meeting an inflation problem that says we probably can. So this Tuesday at 8:30 a.m., we get the April CPI report. That's the Consumer Price Index, which measures how much prices are rising for everyday things like groceries, gas, and rent, okay? So it's basically the inflation report card. Now, consensus expects 3.7% year over year, meaning prices are 3.7% higher than they were a year ago. So if CPI comes in hotter than expected, rate cut hopes get pushed back and stocks will usually drop. So if it's cooler, markets may actually rally because it gives Warsh room to cut rates later this year. Now here's what you need to understand. The S&P 500, that's the index tracking America's 500 largest company, just closed at a record high. We're trading at 20.9 times forward earnings. What does that mean? For every dollar that these companies are expected to earn next year, investors are paying almost $21. Historically, that's expensive, right? So at these valuations, any disappointment will trigger correction. This week's big question is, will inflation cooperate with the new Fed's plans, or will Warsh start with his hands already tied? We're gonna have to see. So here's your day-by-day guide with what each thing actually means. So Tuesday, 8:30 a.m., we have the April CPI. Remember, that is the Consumer Price Index. This is measuring inflation. Above 3.7% means volatility, stocks go up and down really quickly. Below 3.5% means a relief rally. Markets go up because investors feel better about the future. On Wednesday, we got two things. First, the Producer Price Index, or PPI. This measures wholesale prices, basically what businesses pay for goods because they sell them to us. It's a leading indicator, meaning it shows us what's coming for consumer prices in the next few months. Second, we have the Cisco, the company Cisco, reporting their earnings. So Cisco sells networking equipment to businesses, so that their results honestly will tell us if companies are still spending on AI infrastructure and on digital transformation. Now, on Thursday, we have Applied Materials will be releasing their earnings. They make the machines that make computer chips, the semiconductor manufacturing equipment. So if their guidance is strong, it means the AI boom is still going. And if it's weak, the whole tech rally could honestly be in question. Now, Friday, Powell's term officially ends. So sad. And the Senate should confirm Warsh as the new Fed chair. So watch for his first public comments, because every word actually matters, because markets will analyze what he says about rate cuts. Now, as a bonus, there's a Trump and Xi summit happening May 14th to the 15th on AI guardrails, basically rules about how the US and China will handle artificial intelligence, and any agreements or restrictions will immediately move semiconductor and tech stocks. So here's your personal finance action plan for the week. So let's make this super practical, okay? And I want to explain what everything means for your actual money. So if you're investing, please don't chase all-time highs just because everyone else is buying. When the market is at record levels with expensive valuations like we are now, there's less room for error. So here's what I mean. If companies disappoint on earnings, stocks fall harder from expensive levels than they would from cheaper levels. So if Tuesday CPI comes in super high, we might see a sell-off. So that's when prices drop, and it could be your buying opportunity to honestly get stocks at a discount. So if you're dollar cost averaging through your 401k or your regular investment account, meaning you're investing the same amount every paycheck automatically, then perfect, just keep going. That strategy works best during these types of uncertain times. But if you're thinking about putting in a lump sum, like maybe $10,000 or more all at once, wait until after Wednesday to see how the markets digest the CPI report. Okay, so when it comes to mortgages, the 30-year fixed rate mortgage is still around 6.87%, depending on your credit score. So why does the Fed matter for mortgages? Well, when the Fed cuts its benchmark rate, mortgage rates usually follow downward over time. So if Tuesday's inflation data is good and March signals that cuts are coming, mortgage rates could actually start to drift down, maybe to 6.3 to 6.5% by summer. But if inflation stays sticky, meaning it won't come down, we're stuck at these current rates likely through the end of the year. So your savings account, obviously high yield savings accounts are paying 4.5 to 5% annual interest rate right now. That's the benefit of higher interest rates. Your cash earns more, but obviously here's the catch. Once Warsh starts cutting the Fed rates, banks will likely lower what they pay on savings accounts as well. So if you've been procrastinating on locking in maybe even a CD, that's a certificate of deposit, where you agree not to touch your money for a set time in exchange for a guaranteed rate. This could be your last window to lock in these peak rates, and we may not see these rates for a while because they honestly are probably about to drop. Bottom line, for first-gen wealth builders, this week is about gathering information, not necessarily making any emotional decisions, all right? Q1 earnings were phenomenal. 84% of companies actually beat Wall Street's expectations for their profits, but we're priced for perfection now, meaning stocks are expensive because everyone expects great results. Any company that misses expectations will get punished harder than usual, unfortunately. So here's what I think is about to happen. And here's what I'm kind of calling for this week's outcome. So prediction 1, Tuesday's CPI, I'm expected to come in at 3.6% year over year, slightly below the 3.7% consensus. Good enough to prevent a whole sell-off, but not good enough, honestly, probably to spark a big rally. Prediction 2, Warsh is gonna get confirmed by Thursday, and in his first comments, he's gonna signal patience on rate cuts. He'll say something like, we need to see more progress on inflation before adjusting policy. Now, prediction 3 is that Cisco's earnings will probably beat Wall Street expectations on Wednesday, showing that enterprise IT spending and money that these businesses spend on technology is probably honestly very still strong. So this will validate the whole AI infrastructure story, which we kind of want, honestly. Prediction 4, the S&P 500 ends the week even higher, probably higher than 49,609, which is where we started. But we're gonna see a lot of volatility this week, meaning big swings up and down during the week. Send me your questions. I would love to know, are you nervous about this transition? Or how are you positioning your money? Your concerns honestly shape these conversations, and I just love to know where you are. So drop your questions and thoughts in the show notes. So this week is a major inflection point. That means we're at a turning point that could determine market direction for the next few months, all right? So we got new Fed leadership, critical inflation data coming out, and markets at all-time highs, literally all happening at once. So the decisions that you make should be based on information, okay? Please don't base it on emotion. Fear and greed are terrible investment advisors. So whether you're the first in your family building wealth or adding to your portfolio, please remember, volatility creates opportunity, but only if you understand what's actually happening, okay? The opening bell rings at 9:30 a.m., but smart money gets there early. I am Dominique Broadway, and I'll see you Friday to check these predictions. Until then, let's build some real wealth.